Good day, everyone. We are Group 2 and we'll be discussing investors and financial communication. What are the financial information does investor expected from the organization? This financial information is about the monetary transaction of a person or in the business. Financial statements are the records prepared by the companies that will detail their financial performance and condition. Under the financial statement, there are balance sheet. This will help the investors evaluate the liquidity and the capital structure of the company. Next is the income statement. Allowing the investors to assess the profitability and the operational efficiency of the business. Next will be the cash flow statement. This will track the cash inflows and outflows from operating, from investing, and the financing activities of the business. Financial information can be used in the following ways. First is to alter operations. This will help the businesses adjust their strategies or reduce costs in order to improve their efficiency based on the financial performance. Next is to grant credit. Lenders and suppliers use the financial data to determine the company's creditworthiness before approving their loans or payment terms. Next is to invest. Investors will analyze the financial reports to decide whether to allocate their funds for the maximum returns. Next is to assess risk. This will identify the potential financial risk. This will help the businesses and investors to make more informed decisions. Next is to pay taxes. This will ensure the accurate tax calculations and the compliance with government regulations. Next is to conduct competitive benchmarking. This will compare the financial performance with the competitors in order to identify the strengths, weaknesses, and the areas for improvement of the business. How much information are best delivered? First is the transparency and consistency. Investors will rely on the accurate and standardized reports to track the financial performance over time. This will provide clear and consistent data that will allow easy comparison, ensuring the trust and the informed decision making. Next is the timely reporting. Delivering financial reports on schedule will help the investors to stay informed and make timely decisions. Next is the showcasing competitive advantages. This will highlight the key financial strengths and the market position and the growth of the potential differences the company from the competitors. This will help to have a clear and financial storytelling through PR that will ensure the investors to recognize the company's value.
Moving on to the efforts that public relations do in order to attract their potential investors. Now, of course, number one here is they have to craft a compelling narrative wherein they have to create clear and engaging stories that resonates or connects with the company's mission, the vision, and a unique value proposition in order to be different from the other PR businesses and to also, of course, to close the deal with their potential investors. Number two here is to engage in thought relationships. This is where they could establish the authority and build trust with their investors by positioning their company as an industry leader by contributing articles, participating in speaking engagements, as said in the PowerPoint, and of course by sharing insights on relative topics. Now, number three that we have here is to utilize social media platforms. And personally, I believe that LinkedIn is one of the platforms that they could leverage on in order to share the company's updates and industry insights. And so through this, they could have direct engagement with the investors and they could showcase transparency, of course. And lastly, we have here is to participate in industry events. This is so they can showcase their networking opportunities and to their potential investors, of course. And this is by attending host events, webinars, and workshops to demonstrate the active involvement in the industry. Moving on to the financial aspects in order to communicate to these potential investors. Of course, number one we have is revenue growth. Now, this growth is the metric that indicates the increase in a company's sales over a specific period, reflecting its ability to expand its market presence and attract new customers. So this is what we could use in order to show that we can expand the market presence. Now, ideally, consistent revenue growth is actually a positive signal for these investors. So number two we have here is the profit margin. So of course we all know what profit margin means, that these ratios are actually the measuring metrics or the metrics that we use in order to see the profit of a company uh, that retains relative to its sales and are crucial for assessing operational efficiency. So normally this includes the net profit, the gross profit margin, and of course the operating profit margin. Next we have here is the return on equity, or ROE, also known as ROE. And this is to assess how effectively a company utilizes shareholders' equity to generate profits. So, ang ideally daw is a higher the ROE indicates that there's an efficient use of investments, capital to drive earnings growth. Next is earnings per share. So this is normally known as EPS, which is representing the portion of the company's profit allocated to each outstanding share of common stock, serving as an indicator of profitability. So usually the investors use EPS in order to gauge their company's financial performance. And lastly, of course, the debt to equity ratio. So this ratio is actually a comparison of a company's total liabilities to its shareholders' equity that provides insight, which those will provide insights into its financial leverage and risk level. So this is what they use in order to know if they're taking too much risk or it's still safe to do the risk. And now, ideally, a lower debt to equity ratio is much preferred because this will be the one that's gonna indicate the financial stability of the company.
First, we have credibility and trust. When a company has strong investors behind it, people see it as more reliable. Investors don't just bring money, they bring confidence. Their support signals to customers, partners, and the public that the company is trustworthy and stable. Now, for number two, we have media and market perception. The stronger a company's investor relations, the more positively the media and market react. A business backed by well known investors is more likely to gain media attention and attract other stakeholders who want to be a part of its success. Moving on to number three, crisis management. Every company faces challenges, whether financial struggles or bad press. In tough times, investors play a key role in maintaining the company's image. Their continued support reassures the public and helps stabilize the brand. And finally, number four, networking and growth. Investors don't just bring funds, they bring connection. So through their networks, companies can gain access to new markets, partnerships, and even more media exposure. This opens doors that might not have been available otherwise. Now let's flip the perspective and look at why PR is just as important to investors. First up, investor confidence. So good PR creates transparency, which investors love. When a company communicates well, whether through press releases, interviews, or reports, it builds trust and attracts more investors. Next, number two, stock market influence. So a company's public image affects its stock price. Positive media coverage and strong PR efforts can boost investor sentiment, leading to better stock performance. Now for number three, crisis prevention and management. Just as investors help companies during crises, PR helps investors feel secure. So if a company handles bad news properly, investors are less likely to panic and the business can recover more quickly. Lastly, number four, we have corporate social responsibility visibility. So today's investors care about more than just profits. They want to support companies that align with their values. So PR helps showcase a company's ethical practices, their sustainability efforts, and community contributions, making it more attractive to investors.
One of the example of an organization that has successfully managed its relationship with investors is McDonald's. So how they were able to do it? McDonald's utilizes its financial statements and information to build trust and demonstrate value. So they have transparency and consistent reporting, wherein McDonald's provide detailed quarterly and annual reports to the Securities and Exchange Commission. They also post it to their website and discusses to their annual shareholders meeting. So first, they have income statement, wherein investors use it to assess McDonald's profitability and track trends over the time. The balance sheet, which helps to know the insights into company's financial stability and its ability to meet its obligation to investors. Next is the cash flow statement, which helps to reveal the ability of a company to generate cash, which is essential for investors. And they even have statement of shareholders' equity, which shows how a company's ownership structure and retained earnings have changed over time. They also have category in their website that is solely for investors. It features the stock information, historical price lookup, stock split, dividend history, investment calculator, which is very important for investors for them to know how much their starting investment can earn. Lastly, they also have call to action where and how to enroll. With the financial statement information, this creates a significant positive effects in both current and potential investors because it increases trust and confidence because investors feel more secure knowing they have access to detailed information about the company's performance. They also help to have informed decision making because it allows investors to conduct a thorough analysis. And because McDo has websites solely for investors, it enhances investors' engagement and attract potential investors as they have real-time data on possible return of investment. And most importantly, consistent and clear communication fosters long-term relationship with investors. That is all for our presentation. Thank you.